Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We just did a dubious speculation video a couple of days ago, and we outlined two potential paths, right? But in both paths that we outlined, they both involved Bitcoin going back to its 20-week moving average, right? So we're going to talk a lot about that, and we're going to talk about things to look for over the coming days to give us some insight into what is in store potentially in the fourth quarter of the year, or maybe even sooner, right? Maybe even sooner. One of the theories that we've talked about, right, is the idea that Bitcoin is playing out in a similar manner as prior post-halving years. Even though it's a halving year, what if it's playing out like prior post-halving years? And one of the reasons we talk about that is when you go look at year-to-date ROI of Bitcoin last year in 2023, it was actually more representative of what Bitcoin does in halving years. So 2023 gave us returns that were more similar to halving year returns than pre-halving year returns. And this is something that actually got me into a little bit of trouble last year, looking at monthly returns. Every prior pre-halving year, we basically saw about 6 red months and 6 green months, plus or minus 1 month. You can see 2011 was like that. 2015 was like that. 2019 was like that. But 2023 only saw 3 red months, which is more similar to what we saw, say, in 2016, right? And 2012, where most of the year ended up being green. Even 2020 was mostly green, even though there were some pretty bad months. Only 4 of the months were red. So 2023 gave us what looked more like halving year returns. And so then the speculation, dubious, right? Dubious, and it could veer off, and we'll talk about that a little bit. But the speculation is, what if 2024 does something more like post-halving year returns, right? Just sort of following suit. And the thing to look at when looking at post-halving year, look at 2013. You see how it dipped down in the summer, right? It dipped down in the summer. 2017, it dipped down here in the summer. Same thing with 2021, right? You can see that they all had these dips that more or less corresponded to approximately July. And we could even go take a look. In 2021, you can see that we sort of fell down here in May, but obviously we didn't really get moving back up again until halfway through July. In 2017, we also saw a sell-off into July, in about mid-July, and then we picked back up. And then in 2013, we saw a low by Bitcoin the first week of July. More specifically, it was on July 5th, which is exactly when this most recent local low occurred, on July 5th. And if you look at, sort of the daily time frame, we talked about this trend line here as being very important for Bitcoin as we make our way into Q4. Because this is the trend line, right, that it's going to try to hold support on. And you can see that it did it once again, right? It's done it once again. But it was because of looking at just simply looking at prior halving years and post-halving years and saying, you know what? This looks a lot more like post-halving year so far than it does a halving year. And if that's the case, then the implication, of course, would be that you see some type of a summer lull, right? So back in March and in April and even in May and June, when everyone was screaming for the hills that, we were about to break to new highs, I had to repeat myself that, look, a lot of times, especially in post-halving years, or more specifically, just in years where you get Q4 rallies, you often will see a summer lull where everyone thinks it's going to break out up here, and it doesn't. Same thing happened even in 2021, right? Same thing. And so because of that, right, when you actually look, and 2013 is a difficult one to look at because the ROI on it was just so, monstrous that if you average it out with other ones, it kind of just looks like 2013. But if you average out, say, 20 2017 and 2021, right? If you just average those 2 years out for Bitcoin, and then you overlay 2024, there are a lot of similarities, right? There are. And I would argue that it's more similar to that so far than it is to anything else, right? Except for maybe one thing. And that's the one thing that we have to talk about. And again, I will say this again. My personal opinion here is that it's not 2017, it's not 2021, it's not 2013, it's not 2019, it's 2024, right? That is my opinion. We talk about prior examples not to tell us about what will happen, but to help us prepare for what could happen. So by understanding the context of history, it can help us better prepare our portfolios. Personally, for me, as you guys know, I feel like I've more or less been an open book. I have just kept my crypto portfolio Bitcoin heavy, really since the beginning of 2022. And the main reason, of course, is because of my conviction on Bitcoin reclaiming a lot of market share as we go into higher interest rates and quantitative tightening. I have missed out, admittedly, on some pretty great gains in the altcoin market, but I tip my hat to the people that have been able to capture those gains. I will say, where we are right now, it does look similar to kind of what we saw happen about summertime post-halving years, where you get an explosive move back to the upside, right? Just when everyone gives up, you get this explosive move back up. And the reason why it kind of reminds me of it is because a lot of times, when you're looking at these kinds of moves, you're like, all right, well, this is going to be resistance, right? Like this is going to be resistance. And then Bitcoin just goes past it, right? And this is going to be resistance. And Bitcoin just goes past it. It's kind of similar to what you saw in 2021, where Bitcoin got this move and it's like, all right, well, these are going to be resistance levels. And then it just kind of blew past them, right? And then eventually it had a pullback, but not until September. And then it held support at the bull market support band. Now, is that a sure thing? No, absolutely not. There's no such thing as a sure thing in these markets. The one thing that I think has to be on your radar, and I want to talk about some of the similarities, but I also want to talk about some of the differences. It is important to recognize the 2019 setup. Not because it has to play out like that, but just because there are risks that could manifest, especially around the time that the Fed cuts rates, which is important to be aware of. And so let's start with some of the differences between where we are today and 2019. One of the differences with 2019 and where we are today is that the Fed cut rates in July back then, and Bitcoin topped only 1 month before the first rate cut, right? If you were to overlay interest rates onto this chart, right, Bitcoin topped 1 month before the first rate cut. Well, Bitcoin's local top has been in March, right? I mean, that was several months ago. And, unless it takes out that high this month, which would be pretty impressive, let's just assume it at least takes until August or something. But if it were to take out that high, that would actually be more in line with what 2019 happened, in the sense that it only, you get some form of a local top 1 month before the first rate cut. So that is something to consider. A counterpoint, though, is if you go back and look at the S&P 500 throughout all of its history, sometimes it finds these local tops before rate cuts, sometimes it's after rate cuts. It's not like it always tops X amount of months before the first rate cut or X amount of months after the first rate cut. So that is something that, I think is worthwhile to consider. And so, you still could have an example where you get a rally and then the first rate cut arrives, and then it kind of kills the rally. That's what happened in 2019. Now, the reason why I still talk about some of the similarities with 2019 and what to watch out for here, because it could be similar. This is what you should watch for. But the reason I talk about some of the similarities is because we saw a very similar time frame back in 2019. Gold broke out, right? It had this long range that it had been in forever, and then it finally broke out, and when it did, it marked a local top for Bitcoin. We know that. And so then I was like, all right, well, if the same thing happens again, then maybe when gold breaks out, it could mark a local top for Bitcoin that lasts for 6 to 9 months. Well, that occurred in March, April, May, June, July. It's already been 4 months. And if it were to play out like a prior post-halving year, and you say get a rally above the 20-week SMA into August, and then you get a pullback into September, and then you see new highs in Q4, that would be about that 6-month window, sort of the lower end of the time frame that I gave of approximately 6 to 9 months before we could really pick back up. So it's already been 4 months, right? So you could argue that the 2019 comparison has been playing out. Now, the question is does it continue? Because if you were to overlay sort of that 2019 move and just ignore the pandemic, right? If you were to overlay it over here, if you were just kind of overlay this, and I guess you kind of have to sort of extend it out to actually have it line up, you can see that Bitcoin also had a rally right around sort of this time in that structure. And here's the big test. And this is what I said previously when trying to decipher if this is a post-halving year like return or if it's going to be kind of like a 2019 style, is what happens at the 20-week moving average. Because both prior paths that we outlined, whether it was 2019 or post-halving year, both of them had us going back to the bull market support band. Right? 2019 did. Right? We know that. We back tested it right here. And also 2021, right? We went back up to the bull market support band there. And in 2017, actually 2017 is not a great comparison because we never really went below it. Not on a weekly close, but 2013 is. 2013 we had a weekly close below it, and then we were right back up to it. Now, because of the pace of the move, it does seem a little bit more like a post-halving year, because in 2019 when we had this move, there was a lot of consolidation at these lower prices, right? About a month of consolidation at the lower prices after we fell below the 20-week moving average. This time, you could see that after we fell below the bull market support band in its entirety, it only took 1 week to get back up near the 21-week EMA. Though, admittedly, from when we fell below the 20-week SMA, it has been about a month. So in that way, it could still be like 2019. But, one of the things about this move that I was looking at with 2013, because they both bottomed July 5th, that following week had a weekly close above the 21-week EMA. Unfortunately, last week, Bitcoin still hasn't had that weekly close above the 21-week EMA. We're above it now, and if we were to close at these levels, then it would be a weekly close above the 21-week EMA, but it hasn't occurred just yet. So let's see what happens here, because we are very close to the 20-week moving average. Now, the 20-week moving average is at around 65,500. This is the level that I said just a couple of weeks ago we were likely going to rally back up to, regardless of what happens in Q4. And that's, what I think people should take away, is that regardless of what happens in Q4, the most likely outcome, based on 2019, based on 2013, 2017, and 2021, was always a back test of the 20-week moving average. We're about to find out the strength of this move based on whether it can durably get above the 20-week moving average, or if it just gets held as resistance, and then we go put in a lower low in terms of like where we just went, right? So that, I think, is going to be the big question that we're going to have to figure out over the next couple of weeks. Do we durably get above the 20-week or not? Now, look at the difference between 2013. Look what happened in 2013. Once we got back above the 21-week EMA, we basically just slowly we saw the price of Bitcoin slowly grind higher. But look closely at what happened. We had a wick all the way up to the 20-week SMA, and then it was a red week. You see that? A wick all the way up, and then a big sell-off down, and we ended up closing the week red, but we still closed above the 21-week EMA. And then we saw Bitcoin basically between the 20-week SMA and the 21-week EMA for about a month or so. So if it's like 2013, you would expect it to spend a little bit of time between the 20-week SMA and the 21-week EMA. But here's the thing. Whether it was 2013, right? Whether it was 2013, you see that wick to the 20-week moving average? Whether it was 2013, and even the prior week had a wick to the 20-week SMA, even above it. But whether it was 2013 or whether it was 2019, we both saw Bitcoin go back up to the 20-week moving average. Now, listen, I struggle with this, honestly, because on one hand, the year-to-date ROI seems very similar to post-halving year, right? On another hand, if you look at 2019, it also had this lower high structure where it was basically barely, very, very slight lower highs and very slight lower lows. But even after the low that took out the 20-week SMA, we still had a rally back up to it that was still yet another lower high. So can Bitcoin take out that lower high structure, right? That's ultimately the question. And, I don't know the best way to draw it, whether you want to draw it like that. That's certainly one way that we could draw it, where it's, basically right up at those highs. You could also draw it, basically to connect that that point, and then this weekly close, and just say that that's a fake out. If that's the case, it could still go all the way up to 69K and still have that structure. But if you want to give it as much room as you can, all the way up even to potentially 71K, right? 70 to 71K. So this is the test, right? At the 20-week moving average, does Bitcoin have enough juice to get through it? And one of the dangerous things that, that can happen with a lot of people in these times, and I said this back in 2023, is when Bitcoin gets moving like this, it can be dangerous to assume that, every specific level has to hold resistance. It'll find resistance somewhere, of course. But it's hard. It's hard to know exactly where that's going to be, whether it's just sort of a sweep of the high and then a fade back down. I think Tesla did something like that, actually. If we go pull up Tesla. Basically, it just had a move where it just swept the high, and then it had a pretty big pullback. It's still right back up here, but it had a pullback. So again, be aware, because even if it's 2013, where you have a sort of a left translated cycle, you would still get some form of rejection off the 20-week moving average if it's 2013. If it's 2019, you would also get rejection off the 20-week moving average. Where it becomes interesting is what comes after that. Does it consolidate and then pick back up into August? Or does it do what 2019 did? Basically go back down to the 21-week EMA. You look closely at 2019, you can see it went up to the 20-week SMA. It went down to the 21-week EMA, held it as support for about a week or two, and then, we slowly went down to a new low. So that, I think, is the thing to consider. And I think one of the things to think about is, structurally in 2019, like, why did it do this? Like, why didn't it just continue higher? And to be completely honest, your guess is as good as mine. But one potential reason is that, when the Fed cuts rates, people like, that are super risk averse, perhaps like me, who just stick with the blue chips during the rate hikes and everything, they might start to look at some of these other things. They're like, all right, well, they've been bleeding against Bitcoin for the last 3 years. Maybe they're going to start to do better now that rate cuts are here. The issue for Bitcoin when things like that happen is that if people start to change their bids from Bitcoin to something else, then that's a little bit of liquidity that's lost, right? A little bit. And so maybe that would explain why Bitcoin in 2019 had one more lower low. And then again, it had another lower low after that. But that was, of course, due to the pandemic-induced, or the pandemic-induced recession. So it could be that. Now, one of the things to consider as well, as it pertains to monetary policy, is why did it play out like this in 2019? One of the things to remember in 2019 is that Bitcoin rallied on the first rate cut, right? It rallied. But one thing about 2019 is in June of 2019, the Federal Reserve at FOMC said they're not going to cut rates till 2020. So in July, when they actually came out and cut rates, it was sort of a surprise to the market. Today, it'd be the equivalent of today if they just came out and cut rates in 2 weeks, right? It'd be kind of the equivalent when no one's expecting it. Again, it's not my base case, and I don't think it should be. I think they've been pretty clear that they're going to sort of wait. And you can see right now the odds of a rate cut in July are only 8.8%. It seems more likely that you're going to get one in September. So that's the question. Do you see some form? Because again, if you think about it, in 2019, the rate cut was not priced in because they told us that we were not going to get a rate cut until 2020. And then when it arrived, it immediately got priced in. Now, everyone and their brother, right, is expecting a rate cut in July or in September, right, in September. And so now that rate cut is being priced in, not only are you seeing assets like Bitcoin do well, you've seen the Russell. I mean, look at the Russell, right? The Russell 2000, it's been doing well, right? These smaller companies they're anticipating looser monetary policy. Now, here's the thing though, when it comes to the Russell, is that if you look at it divided by the Nasdaq, while it has been a great move, guess what? I mean, I hate to break it to it, it still isn't even above its bull market support band. And we've seen similar moves where it rallied back up even above the 20-week SMA, but was unable to hold it. You see that? It's happened before. And in fact, it rallied to the 20-week SMA in the summer of 2023. Right? You see that? In the summer of 2023, it rallied back up to the 20-week moving average, but then it still ended up falling off once again. And so it's true that when looser monetary, and I've said this forever, right? When looser monetary policy arrives, some of the higher risk assets can start to outperform the lower risk assets. The question is that time already starting to occur? Or do the blue chips have one more move left in them in terms of reclaiming that dominance even more? My opinion with Bitcoin is that it has one more dominance move where the Bitcoin dominance goes up a lot. Okay? Right now, it's right around 55%. But I've said for 3 years now, I think this rally is going to go on until 60%. So, and I think it's going to hit it in Q4. In the fourth quarter this year, I think we're going to see Bitcoin dominance at 60% or approximately 60%. I do. The only question, if that's true, right, if you believe that, I mean, look at like Bitcoin dominance excluding stables. I mean, you can see it's just riding that same trend line it's been riding forever. If you believe that, then the question is it on a Bitcoin rally or is it on a Bitcoin dump? Okay. It could be elements of both, right? It could be one. It could just be a Bitcoin rally. I don't know. It's really hard to know. Last cycle, what we saw was a Bitcoin rally until alt Bitcoin pairs broke down. And, you know, this cycle, we still haven't seen that. They are really close, but they're still not yet broken down. So that's something that has not yet happened. The other thing to consider is that if you were to look at, like, you know, Bitcoin dominance plus USDT dominance, it still is at the level that it was at just before rate cuts last cycle. It's just like, the market is just kind of biding its time, waiting for the rate cuts to actually arrive. And I think this is gonna go higher. And of course, if you look at USDT dominance, that I think is going to that is something that we've seen a lot, in the past where it hits this trend line, it breaks through the bull market support band and then it back tests it. So we don't really have data on this going back to 2013, obviously, because stablecoins, it's not like stablecoins have been a huge part of the market for that long. But if you look at what happened in 2019, Bitcoin got above this 20-week SMA and then it came back down below it. So let's just see what happens, right? Let's just see what happens. Can it hold? And if that's a frustrating thing for you to be like, well, let's just see what happens. Guys, I've said forever, right? My strategy is just keep my portfolio Bitcoin heavy because it gives me exposure to the upside, but it also minimizes my downside risk. Because, if there is a sell-off, my assumption is that Bitcoin would recover at some point, especially because we would just go back to looser monetary policy until, and the money printing and whatnot. So that's why I've just decided to stick with Bitcoin. Admittedly, I have missed out on some gains in the altcoin market, but I at least explained my reasoning. And, the reason panned out, the reason was right? The dominance went up, but it is true that some of the alts did really, really well. So that's where we stand today, and I think the biggest question for me is, and this is kind of some of the rhetoric you'll find around the Cryptoverse, is this a left translated cycle or is it a normal cycle, right? One of the interesting things, if you look at the ROI of Bitcoin, right, from the low, right, if you look at it from the low and compare it to the last two cycles, we're kind of right where we always are, right? I mean, who cares? This is where we always are at this time. If you compare it from the peak, right, you go peak to peak and you just look out the last two cycles, we're well ahead of where we normally are. But if you take it from the April peak and just compare it to the 2016 cycle, which a lot of people have made that comparison, kind of looks like we're right where we were back then too. So, if it were to follow this 2016 move, then perhaps you are sort of preparing for a left translated cycle. But the reason why I kind of go, I'm not so sure about that is 3 cycles in a row, we've had a peak in Q4 of the post-halving year, you know? And maybe that'll play out again, right? You get a peak in Q4 of the post-halving year. And, is everyone overcomplicating it with this left translated peak idea? I don't know. I mean, I think it has to have merit, right? It has to have merit, especially considering that last year Bitcoin, played out more like an election year, a halving year return. And at least so far this year, it's been playing out more like a post-halving year return. And when we saw 2013, 2017, and 2021 all had these summer lulls, and in 2013 and 2021 also both went below the 20-week SMA. And then they got right back above it kind of in that July-August timeframe. So that seems kind of reminiscent of that. So I'd say this, if it just rallies into Q4 and even into Q1, then, maybe it's a left translated peak. I don't know. If, on the other hand, we find some resistance at the 20-week moving average, like we did in 2019, right? If it just does something like this, where it rallies back up and then it just gets rejected and then it goes back down and puts in a lower low, right? Like puts in a lower low, and then you deal with all the yield curve on inversion and all that stuff, then perhaps it's just a normal cycle. And you just get some type of intermediate, longer downtrend over here that lasts longer than people want it to. So I don't really know. I really don't know which one's going to play out. But I think, you should at least know some of the things to look for. Look at the reaction around the 20-week moving average, which is right, just north of $65,000. On shorter time frames, if you go look at some of the daily moving averages, I think we just rallied back up to both, and we're right above that 50-day SMA. So we're, Bitcoin's right above that 50-day, and back in 2023, we had sort of a rally back up to the 50-day. It swept the 50-day, got a little bit of a pullback, and then it got above it, right? Same thing 100-day, right? You came back up to the 100-day, got slightly above it, pullback, and then it started to move. So let's see, right? It just got back up to the 100-day in 2019. You can see why it's difficult, right? Because it's kind of the same thing, right? It's so hard to know. And also, if you remember, we talked about this weekly RSI business. If you go look at the weekly RSI, it still looks like it could be following either path, right? If you look at what happened in 2019 and 2023, let me clean this up a little bit so it's a little bit easier to see. What you'll notice is that in 2023, the weekly RSI bottomed right there, and then it had a rally back up. Now, we're above it right now, but again, if by the end of the week, Bitcoin cools back off and there's some digestion of the move, then you could still have a weekly close sort of at the top of, at this level. And in 2019, it also had this same move. And we did a whole video on the relative strength index about how this is where it bottomed in 2023 and 2019. And then the next expectation will be to see the weekly RSI go back up to approximately 54. Right now, it's at 56, 57. But again, we just started the week. It could end the week at 54 for all we know. But that, I think, is what, does it do 2019 and then go back down and put in a new low? Or does it do 2023 and get that rally into Q4? And it could do something like this where, it gets a slight pullback and then it goes back up. And maybe it goes back up here where it did in the first move in 2023, and then it comes back down, right? It could do something like that. Or maybe it comes back down, bounces, and then drops like 2019. Those are, I think, the two outcomes to look at the most right now. And I think the way to sort of think about it is what happens at the 20-week moving average, right? What happens at the 20-week moving average? Because that's kind of what I think will differentiate whether it's a post-halving year or sort of a 2019. And I think it makes sense to be hedged for both, right? I mean, it's one way to hedge, right, is you have a Bitcoin position, but you also have some set aside in case 2019 comparison persists. And right, what you could have is neither, right? You could have a situation, and this would be tricky, like what happens if you have a situation where it looks like 2013, 2021, 2017, where you're going back up, you come back down, test the bull market support band in September, hold it as support, and then you move up in October. But because the Fed starts cutting rates, then it sells off, kind of like it did in 2019. So then it's kind of like a combination of 2019 and 2013, where you're sort of seeing that move into Q4, but then it gets tempered because the Fed starts to cut rates, right? And again, as far as we know right now, the Fed's likely going to start cutting in September. So we will see. We will see. And I mean, look, unfortunately, with rates and everything, we just don't have a ton of data to know for Bitcoin how the market's going to behave. But I would say that at least this cycle will give us a little bit more data. And I think one thing this has taught everyone is that when the Fed raises rates to high levels and QT begins, then the expectation is that the blue chips reclaim market share. And that doesn't necessarily just mean Bitcoin, right? If you look at even Bitcoin dominance plus ETH dominance, it's also been going up and putting in higher lows, right? And I said a long time ago that Bitcoin dominance plus ETH dominance is likely going up to 80%. That might sound like a lot, but it's already at 73% almost, which is, by the way, the level it was at right when the Fed started to cut rates last cycle, 73%. So we've seen this play out over a long time. I think we're going to get that final move into the end of the year where blue chip dominance goes back up to the top of the range, where Bitcoin and Ethereum take back a lot of that market share. We'll go ahead and wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you next time. Bye.